What's going on, traders? We got a lot to talk about. It's going to be an absolutely crazy week, so I want you guys to be locked in. I want you guys to be prepared. Before we start, like, subscribe, comment your thoughts below. Let's get into the video. So right now, we're looking at the SPY daily time frame. And one of the key levels I talked about in our last video was 598. Not only did we get that move to 598, we broke below 598 and headed as low as 594, 595, give or take. And so heading into close, we did see some recovery towards the upside. And so the question of the day is, if this recovery is real, how high can we go? Well, there's a few things that's bothering me. And the main thing that's bothering me is where we closed on the SPY. We closed right below that Jerome Powell sell-off zone. And I talk to you guys about this zone all the time. Every time we hit this area, we see the SPY sell off. We sold off here, we sold off here. And convenient enough, we sold off here as well. And the reason why I say convenient is, and you guys let me know what you guys think in the comments below. The fact that we got that DeepSeek AI news from China right where Jerome Powell originally sold out the market, I thought that was very, very interesting. So you guys let me know what you think about that in the comments below. I just thought that was crazy timing. All right, crazy timing. But regardless, we got to talk about our key levels here. And so our key levels in regards to the SPY when we're talking about the upside is 600. You break and hold above 600. You're looking at a move to 602. After that, you're looking at a move towards 604, 605, give or take. And then after that, you're looking at a move towards previous highs at around 610, 609. Now, when we're talking about downside, 593 is what you really want to see hold here. You break below 593, chances are you're heading towards your psych level of 590. After that, 589. And then after that, you're looking at a move towards this gap fill at 584. Now, if we're talking about previous highs or all-time highs, I will say this much, that if we break above previous highs, we can start heading towards 614, 616. That was the highest I'm looking at for the SPY, at least for now. But for now, it's just not looking possible considering where we are. And what I would say is to be very careful in this area. If anything, I will wait to see what happens on FOMC meeting come Wednesday, to see if we get any type of rate cuts or if we are getting any type of rate cuts anytime soon. I will also wait to see what happens on big tech earnings, because they will have a massive say on whether or not we pump higher, we break towards previous highs, or if we break much lower when it comes to the overall market. So that's what I'm looking at when it comes to the SPY. Overall, be very careful in this area. I've warned about this before, and every time I warn about this area, we see the market sell off. So maybe I'm just bad luck. Who knows? All right. So let's look at the triple Qs. So what I will say is the triple Qs actually looks pretty good right here, right? We do have a reversal hammer pattern on the daily time frame, which is a bullish pattern. So that is a good sign. Not only do we have this pattern, but we closed right above this gap fill. And what do I tell you guys all the time? Gaps have very strong support and resistance. So things are looking good for a potential bounce back towards the upside. And so your key levels here is 515. You break and hold above 515, you're heading towards 518. After that, 520, your psych level. You break and hold above 520, chances are you're heading towards this gap fill all the way towards 529, 530, give or take. Now, when we're talking about downside, your main level here, guys, I'm just going to get straight to the point, that's 503. You break below 503, you're heading towards 500, 498, and then after that, 495, and then chances are you're heading towards this double gap fill at around 492 on the triple Q. So you really want to be careful here. All right, so next, I want to talk about the VIX, and then we're going to get into the semiconductors. And so, first off, congratulations to Discord members who took VIX calls. One of our members made about 7,864 off VIX 44 calls for January 31st. So crazy, crazy play here. He took this play off of one of our Discord bots. So yeah, congratulations to him. You want access to these type of plays? Discord link will be in the description below. So congratulations to him. What an absolutely killer day. That's a crazy way to start off the week with 7K. So very, very proud of Discord members for taking the initiative and take those trades from our bots, because they're not cheap. All right, they are not cheap. So when we're talking about the VIX here, what I will say is that the VIX left a massive gap towards the downside. So there's very much potential for a bounce in the overall market, and we can see a move in regards to the VIX back towards 15. All right, so definitely look out for this. This is a reversal pattern, a bearish reversal pattern. So we can very much see the VIX recover back towards the downside and fill this gap. So something to look out for. But yeah, as long as the VIX stays below 19, I do think there's potential for more downside. And obviously, the market would do the opposite of the VIX. So that's what I'm looking at for the VIX. I still think the VIX is going to eventually see 28. It's just a matter of when. As you guys know, I'm pretty bearish for the month of February. So that leads us to semiconductors. So SMH. SMH looks okay. It doesn't look great, but what I will say is that it's holding this support level. It bounced off the support level. It reclaimed the support level. I would go as far as to say that this was probably a bear trap, considering what we're seeing after hours. And take after hours with a grain of salt for now. But this support right here is very, very tough. I mean, you look at how much you're rejecting and bouncing off this area. You rejected here, you bounced here, you bounced here, you bounced here, you bounced here. So things are looking good for semiconductors for a bounce when we're talking about the semiconductor ETFs. You look at SOXX, you go to the daily time frame, and as you guys can see, we are currently at the top of a falling wedge pattern. And not only that, we're somewhat bouncing off of this falling wedge pattern after hours. Now, it's important not to get too excited just yet. We want to see a break and hold above 220. Not only break and hold, but we want to see a break and retest of 220, and then chances are we're filling that gap all the way to 230. And so next we got to talk about Nvidia. And so Nvidia, I said this 2 weeks ago. I said Nvidia is going to head towards 120. Not only did I say it was heading towards 120, but I do think it's going to head towards 100. Of course, I had people doubting me. I had people calling me all types of names, insulting me, so on and so forth. But we have to understand something. Pre-split, 100 for Nvidia was 1,000, guys. So I think you guys pay too much attention to the actual number versus to what the number actually means. So pre-split, 100 is still 1,000 for Nvidia, guys. So I don't know why everyone's freaking out for Nvidia to head towards 100. That's a beautiful buying opportunity. I mean, even if Nvidia heads towards like 60, that's still 600 pre-split. So I thought that was very interesting that a lot of you get mad at those price targets. But it's important to note when we're talking about price targets, guys, I'm always looking at the daily and 4 hour time frame. So I don't expect these moves to happen overnight. I usually expect these moves to happen 2 weeks to a month, tops, right? So I'm always talking about the daily 4 hour time frame on this channel because I am a swing trader. And so when I say, hey, this stock is going to head towards 100, or Apple is going to head towards 200, obviously I'm not expecting that to happen within 2 3 days. It'll be great if that did happen, right? But I don't expect those moves to happen right away. We're talking about the daily time frame here. You're talking about intermediate to long term targets. And so when we're talking about Nvidia, Nvidia is at the bottom of its rising wedge, which is a bearish pattern. But I do think we're going to bounce from here, and we can see Nvidia recover all the way back towards this gap fill, all the way at around 142, 143, before potentially seeing more downside. Now, if Nvidia does head higher, you can start seeing a move all the way towards 160, which I do think is very much possible before we see that actual sell off back towards 100. But yeah, I've been calling for this move towards 120 for quite some time. It's finally here. Do I think Nvidia is going to head lower? Not quite yet. I don't think we're quite there yet. And the main thing I do think that could potentially save semiconductors right now is ASML. All right. So ASML has earnings Wednesday, I believe. Yeah, Wednesday morning, right? And this thing has been beaten down for weeks, for months. All right, we look at the monthly time frame, and I mean, look how much this thing has been beaten down. And it's not only that, but on the 3 month time frame, it is at support on the 3 month time frame. So I think ASML is due for a beat for its earnings. Don't quote me on that. Earnings is 100% gambling, but I mean, you look at the daily time frame and you just look at how many fair value gaps are to the upside. There's a lot of liquid upside here. I mean, you're a liquid all the way to 850. You're a liquid all the way to 900. You're a liquid to 930. You have a huge, massive gap all the way to 1050, 1060. So I do think ASML is due for its earnings. Again, earnings is 100% gambling. So take my word with a grain of salt. Do your own due diligence, but I would definitely be watching the options chain to see what whales are going to do when it comes to ASML. Now, in regards to downside, you do have a gap here at around 608. Pretty scary, but I mean, when you have all these fair value gaps to the upside, I think it's only a matter of time before investors want to liquidate this area. So definitely keep this stock on your radar. It looks insane. I'm definitely looking forward to see what investors do for it in regards to earnings. And so let's talk about Apple real quick. Apple, I said this before. Apple has a habit of running into its earnings. So right now, Apple is at this trend. It's right below this trend at around 2. 230. We zoom out real quick, right below this trend right here. So if Apple does give up 229, I do imagine it's just going to simply retest 225. You go to the 4-hour time frame, you do have a falling wedge pattern. So I do imagine it could retest 225 before seeing that move back towards this liquid area all the way at 238. Highest I'm looking at is about 250. Now, in regards to earnings, if Apple continues to pump into its earnings, I'm not optimistic about its earnings. I don't think it's going to beat for its earnings. I just don't. All right. Should that be surprising? No. Apple's just failed to be innovative. It's failed to give its consumers anything new. So yeah, I mean, the best they can do to maybe save themselves in regards to earnings, I mean, they don't really need saving. They're Apple. People are always going to buy their product. It's maybe a share buyback or something like that. But right now, I'm not optimistic for their earnings. I do think Apple is going to see 206 in the near future. We'll have to wait and see. But yeah, 206 is my target in regards to the downside, and highest I think Apple can go in regards to upside is about 250 at least for the short term. So that's what I'm looking at for Apple earnings. And it's important to note that Amazon and Apple have earnings on the same day. And I find it hard to imagine that they're going to do the opposite from each other. I think if one's going to be bearish for their earnings, the other is. All right. So right now we're looking at the daily time frame for Amazon, and it's very overextended on the monthly time frame. I will say that much. But not only that, but you're looking at this daily time frame, and you do have a rising wedge pattern, which is a very bearish pattern. Again, Amazon is very overextended on the monthly time frame. It has a little more room to the upside around 240, and it could even go higher than 240. I mean, it could go higher, but we always see this happen when it comes to wedge patterns. They always end up rolling over. So something to pay attention to. Again, I'm not optimistic for Apple earnings. I'm not optimistic for Amazon earnings. I do think Amazon is pretty illiquid back towards the downside. I mean, this is the daily time frame. Look how much Amazon has pumped. So yeah, do what you want with this information, but I think Amazon is due for a sell off and they can start seeing a move towards the low 200s. And so that's what I'm looking at for the overall market, guys. Let me know what you guys think. There's a lot going on this week. I'm excited. You should be excited. There's a lot of dip buying opportunities, I believe, that's going to come in the near future. We got to be prepared for it. We got to be locked in. And until the next video, traders, have you a good one.